Good morning, everyone. As Mike and Chris mentioned, my name is Charise Flynn. There's a little bit of my bio. We're not going to spend much time on this except for just kind of the fact that I've been in the trenches, was the CEO of a company that raised over $32 million, and I was actively involved in that fundraising, both from local Des Moines investors to coastal investors to strategic partners. So I'm happy to be able to share, 6 years of crazy experiences with you, and this is my third time now, I believe third time, helping co-facilitate this workshop. So feel free to ask questions. I always like things to be interactive. 6 hours is a long time to be sitting, so we're trying to mix this up, and I like to be interrupted, so raise your hand, just ask questions. Nothing has to wait till a specific time. Feel like this can be a conversation. Also, a little side note, normally I would stand the entire time, but I'm about a couple weeks away from having a child, so I might be sitting a little bit more than normal. But so to kick off, I'd like to kind of understand who's in the room. If you can stand up, if you are a founder or currently involved in a startup company. That's awesome. Okay, so look around. These are the other entrepreneurs that are kind of in the trenches going through similar things that you may be going through. It's awesome to know who to network with. Networking with other entrepreneurs that are kind of in the same state can be really, really helpful as you're building your startup. Okay, so then next, I'd like anyone in the room who's thinking about starting a business to stand up. Awesome. So you also kind of have a lay of who you can, start to ask for. And then kind of everyone else, I'm assuming either you're running some sort of strategic group within a larger organization, or maybe you're a service or support provider. Would that be a good label for everyone else? Or maybe if anyone would share, like, what else kind of brought you interested in being here today? I'm looking at you because I didn't see you stand up.
I probably should have stood up. But I really didn't know what the other options were going to be at the time. So I have a small business that I've been running for about 5 years now. And it's just me and a few other people, and I'm toying with the idea of just keeping it as it is.
Yep. So you're definitely in that. You're starting a business.
Or go big.
Yep.
So.
Others?
We're highly involved with the Global Insurance Accelerator, so that's part of why we're here. We're also, we are in our product area, so from a strategic investment perspective, just learning more about how people think.
Great. Anyone else who we didn't cover that wants to share why they're here?
I was an owner, and I've been involved with Plains Angels, know quite a few people in the room, and here for moral support for a startup.
Awesome. Would you consider yourself an angel investor?
Yes.
Okay. Get to know this guy.
I work for Baton Global. It's a management consulting company here in Des Moines. I think my company always just likes to partner with firms in the area, and for me it's a good opportunity, I guess, just to be here today. So.
Wonderful. Thanks everyone for kind of sharing what your perspective is and why you're in the room today. I'm going to start by going through just a very quick overview of the agenda. This morning we're really going to spend time thinking about preparing for your fundraise. What are the areas that you have to get ready for before you really should be having those first conversations? So this morning will really be around preparation. This afternoon we'll get more into the nitty-gritty of I'm ready to go fundraise. How do I do it? How do I create those relationships? What's my strategy behind my fundraise? What are kind of the legalities of a fundraise, et cetera. So if you just kind of can think about, even your questions of this morning is more preparation, this afternoon is you're in the thick of fundraising. So with that, we're going to start off by focusing on the pitch deck. And this is all about telling your story. And I always think that the pitch deck is beyond, hey, I need to prepare this thing to go talk to investors. I think going through the exercise of preparing a pitch deck can just help you think about where are there gaps in my business that I have unknowns. It can be a great planning tool for you. Even if you never plan on talking to an investor, thinking through what your problem, solution, all the parts of a pitch deck can really help you kind of think about all the things as an entrepreneur that you have to have a handle on when it comes to starting your business and running your business. I also think, I love this quote. If the idea and execution are lacking, then no pitch deck will get you investors. And so, you can have a wonderful, beautifully designed pitch deck, but if you don't have any traction, if you're not showing execution, and the other underlying idea isn't that great, you're likely going to have a hard time raising money. Some people spend so much time on making this like beautiful masterpiece of a deck, but the reality is you have to sit across from an investor and tell your story, and it has to be compelling. It has to be a compelling problem, and you have to have shown execution. The other thing I think that's a common mistake when you're preparing for meetings with potential investors is thinking, oh, I get an hour meeting with them. There was a study that came out recently that says the attention span of humans is like down to 8 seconds. So if you think about 60 minutes, it's even generous to say you have 5 minutes of attention. So the way that you structure your conversation going into those meetings is really important. And thinking about what's going to get an investor excited early on so that they're engaged, more than that 8 seconds, more than that 5 seconds, or 5 minutes. Sometimes people spend so much time on themselves and backstories, and you really have to figure out, like, how am I going to catch them really, really early? And so as we think and walk through the pitch deck, just think about that. It's a little bit of a storyline, and you don't get a 2-hour movie to build up to it. You have to catch them right up front. There are lots of different models out there for what you should include in your pitch deck. I went online and kind of did this matrix of the 20 plus potential slides that you could include. What is, welcome, have a seat wherever. What are kind of the typical slides that you'd want to include? And I would say of this list, you should narrow in on about 12 or 13. I think anything beyond that is too much for your main deck, and it's fine to have appendix slides, but really kind of go through this list and say, okay, how can I most succinctly tell my story in about 12 slides? I realize that it's often hard to start from scratch. Use Google as a tool. There's an amazing amount of templates out there. There's an amazing amount of published decks that you can see other companies, how they've told their stories. And sometimes that can help create a framework for, oh, that's how they structured the way they talked about their problem. That's the way that they structured a competitive slide. It can be really helpful in creating kind of that base platform of where do I start when it's a blank slate. A few other kind of overarching notes before we get into the pitch deck. I think your slide titles are really important. There's kind of two methodologies that I've seen that are pretty commonly accepted. One is saying, here's my title, it's problem, solution. I mean, very, very straightforward, what you're gonna be telling an investor. Another method that I've seen be really effective is using your slide titles to almost tell a narrative. So if someone would only read your slide narratives or your slide titles, they would almost get a story in like a sentence format from one slide to the next. Pulling that off is a little bit more challenging, but if you're able to do it, that can be a really impactful way to build your presentation. I think a good example of this is instead of just saying team, you could label that slide the right mix of passion and experience. That's a little more punchy than just saying, here's my team, when you're thinking about your titles. I think the other thing to avoid is the kind of cliche terminology of we're super innovative, we're disruptive, we're world class. people are kind of sick of those terms a little bit. So I would try to avoid them if possible. And this is also your story. You're going to be sitting down with people sometimes over coffee telling your story. It might be a formal presentation, but a lot of times early stage, when you're raising money, it's a little bit more informal. And you want the way that you've pulled your story together to be authentic to you, so that you can be having it as a conversation, and it doesn't feel like there's a bunch of language you wouldn't normally use in a conversation. I've seen people really stumble where they have this, really smart, brilliant pitch deck, but they really struggle at authentically delivering it because it's not in a style or word choice that they would ever really use. So think about that as well, of like, this is your story about your company. Be you, don't be something you find on the internet. Okay, so we're gonna have this next part be very interactive. Everyone should have a handout. It's called the Slide Deck Workbook. And for those of you that have computers, I'm fine with if you want to do this project on your computer as well. You're not going to have a ton of time, so you're going to have to stay focused if you do pull up your laptop. But we're not just going to talk for the next hour. We're actually going to start building your slide deck. And as you can see, what's in it? Nothing. So this is where the rubber hits the road. So I'm going to give an overview of each slide in there, and then I'm going to give you about 3 minutes, which isn't a ton of time, to kind of put down your first thoughts of how would I explain, to start with, the problem that I'm solving in my company. So one of the main first slides of a slide deck is usually explaining the problem. Like, why does your company exist? What problem are you solving? What pain points does your customer have that you're alleviating? Why do you exist? These are all kind of questions to help you think about, hey, this is how I would answer this in the way that I talk about the problem. I think that it's also important that you avoid looking like, hey, I had this idea and now I'm looking for a problem to solve, versus I started with a problem that I want to solve. There's an example here. So Airbnb had a deck. This is probably now 7 or 8 years old, but you can find the entire Airbnb pitch deck from their very, very early days of fundraising online. It's a very, very succinct pitch deck, and one that I really like. You can see their problem statement says, price is an important concern for customer booking travel online. Hotels leave you disconnected from the city and its culture, and no easy way exists to book a room with a local or become a host. So that was 7, 8, 9 years ago when Airbnb started. Those were the 3 problems that they were working to solve when they started their company. There's another example here that talks about another company that is creating an email solution for businesses. And I think they've done an interesting job of working in some numbers and statistics into how big the problem is right off the bat. And as you'll see, like, these aren't super long statements. Their problems are essentially stated in 3 icons. So with that, I'm going to give you 3 minutes to come up with what's your problem statement. What problems are you solving with your business?
What if you're solving multiple problems?
Ultimately, you have to be able to explain it succinctly. So it has to. It's almost like, how do you boil it up into like maybe a little bit higher level of thinking than sometimes you want to get into the nuances of almost like features. Like, this is what the feature could do, but what's the problem for the customer that you're solving? If you have multiple customers that have multiple problems, I would say you need to pick a direction. That's usually early on a problem that lots of startups have, is they're trying to be too many things to too many people right off the bat. Okay, time is up. So that gives you just a starting preview of what your problem is. One of the things when I walked around is usually when you start, you have lots of words and you're trying to capture kind of all the things you're thinking about. Eventually the next step is to try to boil that up into, if you could only use 3 words to explain your problem, like price, hotels. This is kind of a bad example. How would you boil that up? And then how would you start to put some visuals around the way that you explain your problem? So that's kind of the next step based on where you are now. Usually it starts with like a lot, and then as you iterate on your slides, they become more and more succinct. The next slide we're going to talk about is the solution. So the solution side is how you explain how you alleviate the pain and the problem. It's important to think about, how do I make my customer's life better? What am I solving for them, and how do I explain that? Again, I think Airbnb has this really succinct way of saying it. They save money, they make money, and they share culture. And they have a nice little lead-in where they talk about how they're doing it. So they're saying, we do it through a web platform. If your product is a physical product, I think it's important to say that you're a physical product. If you're a technology, software as a service product, oftentimes you would include that in the solution, saying, via a SaaS-based platform, and this is how we solve the problem. So 3 minutes starting now. All right, 3 minutes is up. Just want to check in. Is 3 minutes about enough time for you guys to get first thought down? Is it too long or too short?
Fine.
Okay. Is anyone brave enough to share what their solution is and how they're talking about it? Go for it.
You're talking about, okay, sorry. Okay, so we are a new company that's entering the dry ice industry. And a specific segment of that industry, we are going to get in the equipment rental business for companies who do dry ice blasting. So for restoration or remediation companies who use it in cleaning processes. And currently, a contracting company generally has to go to 3 or 4 different vendors to get everything.
I'm going to stop you. So what's your solution in 3 bullet points?
Oh, I'm sorry. I wasn't first. We're going to provide one-stop shopping, and we're going to provide better customer service than anybody else in the industry.
Okay, thank you. Anyone else want to share their solution?
So we provide a cost-effective finance option that saves customers money and has predictability to the budget.
Okay. I'm thinking about that predictability. I mean, there's ways to kind of almost break that down into
And our target
punchlines.
is schools.
Okay.
If you want more solutions to that, I can keep going.
Anyone else want to share?
The hands-on training, we provide behavior technology training that bridges the gap between academia and practice.
So the solution that you're bridging a gap is really the solution. Okay. I'm going to kind of reserve giving feedback, by the way, because without all the context of your entire business, it's not really going to be helpful for me to give you feedback, by the way. But I think it's helpful for you guys to hear how you're all thinking about some of these slides. The next slide we're going to talk about is your product slide. So just a little bit of background on creating product slides. There's specific type of investors that like product demonstrated in a certain way. I would say coastal VCs take much more of a interest in wanting to know the depths of your technology and product. I would say more in the Midwest, my impression is that the VCs are more, and the angel groups are a little more interested in your business and how what the business looks, how it operates, and they don't get as geeked out on the technology. Whereas on coastal investors, sometimes they'll totally geek out on technology and say, I don't care that you don't have any of the other things figured out. This is going to be revolutionary, and I'm going to invest just because it's a great product. So I think it's important to kind of know your audience and know who you're talking to, and how much emphasis they put on one part of your business versus the other. Sometimes it's helpful to do like almost a video of your product if you can demo it, or create kind of a demo that puts it together. I always think it's a little risky to do a live demo of your product. A lot of things can go wrong with technology. Let's be real, early on when you're in a startup, there's sometimes lots of bugs. So the live demo is something that I always caution people against. You might be passionate about getting in and showing it to them, but it often can cause some problems. So pictures, screenshots, or videos are usually the best way to demonstrate your product. If you have a physical product, I think that's a slightly different, bringing where you're at with that physical product is definitely a benefit, as long as it's not a massive product. So with this, I'm going to give you, again, a couple minutes to think about how would you want to represent your product. Would it be screenshots of specific areas? Would it be a demo of it? How best can you portray what your product does? Okay, time's up. One other note on product. It's usually the area that I find a lot of entrepreneurs have a lot of passion about, because they spend so much time in their product. And I think it's a really compelling time in your presentation to let that passion really come through. I would just also kind of warn that you pay attention to how much time you spend talking about your product, because there's so much passion there. It can really start to eat into your 20 minutes or your 30 minutes of attention. So you have to often kind of hold yourself in check of how much time am I going to passionately go into the details of my product, and at what point are you losing your audience going into the details of the thing that you just figured out that's going to be revolutionary, but the investor's saying, okay, high level, I got it. Let's move on to the business stuff. So it's an area to mix, both show your passion, but don't let it kind of consume the entire part of your presentation. The next part that we're going to talk about is market size, and one of the things that I want to flip through both of these slides. So as you're thinking about your market size, you can see how market size and then business model play into each other. I think that it's important to have sources to back up your numbers, and I know in some industries it's really hard to put together the market data, but it's really important to find accurate data. So starting with like the largest market, that's kind of, you want to start at the largest picture of this is the market I'm going after, but then this is how it's going to become more specific. So the total available market for Airbnb is there's 2 billion trips booked worldwide. That's through all sorts of sources. So at the largest level, 2 billion trips. Then they start to break it down. Okay, so of that, what is really our part that we can service? They're not because they're not booking hotels. Like obviously, that part of the market just gets sliced away. So you have to start slicing and dicing, saying, no, we're not in the hotel industry. Therefore, we can't actually include that in our serviceable market. So they go and they say, okay, of all travel, we're really looking at budget travel and online travel. So of that market, how much of that can we steal away? We think we can steal budget and online. We're not going to really focus on offline, and we're not going to focus on luxury, at least at this point, and the way that they were thinking about their business. So that becomes what they believe is the serviceable market. And then they break it down further and say, we want to take 15% of that available market. How they came up with 15%, that's their game. But you have to think about how much of this is realistic for me to capture in a certain amount of time. And so later on, they say they're going to capture that in a specific time set. That leads to 84 million trips with Airbnb that they think that they can capture. So we're going to now go to the next slide of like, why is setting this market size up like this important? What they do is then they go into their business model and say, of those 84 million trips, 15% of the market, if we charge $25, we can have 200 million in revenue. I think this is a really clear way for you at the highest level to say how much potential revenue could we have if we take X percentage of the market. Market sizing can be a very difficult process, and I think it's also sometimes hard to say, well, how do I want to represent it? Is it in people? And I like thinking about, okay, so how does it break down into a business model? What is the number you want to show that then you could charge to say, I can make this revenue? And they say they're going to make this by 2011. So I think this was like maybe a 3 to 5 year projection for them, which is pretty aggressive. 15%, I would say most investors would probably look at you like, really, how are you going to pull that off? So when you're thinking about your share of market, you also want it to be realistic, and the rest of your deck is going to have to back up why you think you can get that share of market. Any questions on market sizing? This can be kind of one of the more difficult parts of building your deck.
Just a quick one. Initially I used to put that, but now I have pulled it out because, again, there are multiple challenges. One is not getting the right data to start with, and it kind of throws you to that rabbit hole of trying to figure it out. Mm-hmm. And then the second piece is about validating, is this that right segment of that pie, of that piece of that pie that you're looking at, and I think that kind of makes it a bit more confusing. And
how far along are you in your startup?
so yeah, the product is out. We are in that early phase of so development is done.
So I think I have a couple pieces of advice. There might be times where it feels just too early on to really make a case for the market data. There's been times where I've advised startups to do the work to put it together, but have it in an appendix. And so if an investor asks you, how are you thinking about your market size? At least you've gone through the thought process. But I can understand where it can be controversial, where it's like, do you really want to create that controversy within a first, second meeting with an investor, saying, I'm going to capture 5% of the market, 10% of the market. So that's, I think, it's like a strategy of where do you want to upfront present it, or do you want to have it ready? I would say you should have it ready, because certain investors will always ask you, hey, if you get 5%, 10% of the market, what does this look like? How big of an opportunity is this? Investors want to know that it's big enough an opportunity. They still know that you're early on, you might not execute against it, but they want to know, hey, there's something large enough here that if this company goes big, I'm going to make a lot of money by investing in you. Market data can sometimes shake out for an investor that there's really not a big opportunity. And so they do care about it, but it's challenging. The data is another part. I would say source what you can find and talk through the challenges. In your conversation with investors, you can be open about how the data might be really challenging, but this is what you've been able to come up with. So there's a difference in the way you present it versus like, I'm putting a stake in the ground and this is absolutely correct. I think that most people realize it's a guesstimate. Does that help? Joshua. Do you go by Josh or Joshua?
Either one.
Okay.
So for the serviceable market, and this, I guess, is especially for those of us who've like already released a product, should that be based on our existing sales channels? I'm just confused when it comes to going from serviceable market to share of the market you think is realistic to capture? Because it seems to me like serviceable already kind of assumes that you're basing it on what's realistic to capture.
Serviceable is like who could you serve? You're not going to serve all of them, right? You're not going to capture 100% of the market. So it's basically, can you talk a little bit about the industry that your product is in and how you're thinking about
video
it?
Games, so like
Video games.
Like, if you think of just like an app in the App Store, that kind of
Right, so there's probably some demographics that you're saying my serviceable market is, I don't know how you're, like what you're breaking that down to be, but you're probably saying of all people that could play video games, X people play video games, and of them, Y characteristic are likely to play this.
So the niche that we're focusing on.
Yeah, so break it down. And then if within that niche, you have to pretty much say, but is everyone who likes Ninja Turtles going to actually play this game? Again, maybe a horrible example. If you could find the data of 1 million people love Ninja Turtles, maybe only 10% are actually Ninja Turtle lovers who are going to play your game. That's how you make that jump. Does that help you think through the jumps?
And I would add to that, just real quick, when you're talking about where you are today with the product and expanding a product line, don't limit yourself to what your market is today. I mean, what investors are looking for growth. They're looking for, is this going to get bigger? And so if you are doing a new product into a line, you need to be able to show, hopefully, that there's more to capture. Maybe there's a second channel. Maybe you're going to go international distribution, white labeling, whatever that is, but don't constrain the market size based on how you go to market today.
Another question?
So along those
Kip?
same lines, I sell a physical product and I've been selling it for a few years only in the United States. So for my total available market, do I want to include globally the opportunity?
If you can, I would suggest that it would be a global opportunity. And then that's one place that sometimes people make a jump saying, and it depends on, are you really only planning on being a US company for the next 10 years? Then I would use that as your serviceable market could become opportunity within the US, and of that US you capture X. For other people that like next year they want to go global, I wouldn't make that jump to that being the thing that limits you.
Right.
The other thing, sometimes global numbers are really hard to come by. So another way that sometimes companies do their market size is just based on the US, and they make that super clear, US market size, because they know it'll be much smaller than the international market size. So there's different ways to go about it, but you just want to be really clear about how you're approaching the market.
Sure. Thank you.
Can you talk a little bit, you were mentioning the difference between coastal investors in the presentation versus Midwest, like having the $1 billion company or opportunity, because clearly this is not $1 billion a year and it's Airbnb. So how, can you just talk about that?
Yeah, they would probably say, they put a short window when they were going to achieve this, like 2 to 3 years. And to become a $200 million company in 2 to 3 years is a pretty aggressive landscape. They probably would go back and say, and I think they were trying to show, how can we become a massively important company in a couple years without like the math being super crazy. The 200 million revenue, you're absolutely right though, of they would probably, if pushed on it, say, well, how do you become $1 billion company? And that's probably where they would say, well, we wouldn't limit to budget. We want to limit to online. Our next vertical, we're going to go after all those like actual B&Bs that book over the phone. And then we're going to go after luxury. I mean, they would probably start to say, hey, we've looked at this in a channel approach.
So basically talking about it versus just having those flashy numbers on the screen.
Yeah, and I would say anymore, I don't think like showing that you're $1 billion company is believable. I think showing what you can become in 2 to 3 years is believable. if it's big enough. That's the if. And I think that goes back to Mike's point of if in a couple years you're like at 5 or 10 million, I don't think that that's super compelling. So you'd want to tell the story in a different way. Like the next opportunity there is the next opportunity there. Does that help? I mean, there's no easy and right way. Like the strategy, really strategy comes into each of these slides. But hopefully that provides some guidance. Matt?
Question regarding the audience of the investor, their mindset. Can you give a little clarity on what is their expectations for return? What type of return? Is it a multi-year deal? Are they looking for equity?
Right.
Do they want to be out in 3 years? More focused on the Midwest. I'd rather be with a Midwest investor or a Midwest company.
I would say,
give me just
a couple of
clarity on the
things.
share of the market. I don't want to be overzealous and say we're going to take the whole market.
Right. So in the Midwest, I find people just tend to be more conservative. So if you put too large of number out there, as far as revenue of what's possible in a couple years, they're probably going to think it's totally unbelievable and that you're like a little crazy. So I would be careful in the way that you frame it. Too large, too fast is probably going to create this red flag for them. So how do you present a realistic picture, or how do you not put a time frame on it, right? Say, I'm not saying I'm capturing this within any amount of time, but I'm saying the opportunity is big enough. Like that would be one way to frame it. Regarding like how long investors want to be in and what they want their return to be, that differs by individual investors. There's a lot of angel investors in the Midwest that I would say that are really patient, because a lot of them have built 10 to 15 to 30-year businesses, 40-year businesses sometimes, and now they're reinvesting. So they take, I think that kind of mindset is a different approach. They're more patient. They believe in not a 2-year, 3-year bang up, but a long-term sustainable business. There's other investors that have been more probably involved in startup business ventures. They're likely gonna want something a little bit quicker, and like a 20-year business for them is probably not something they want to invest in, because it seems like a lifestyle business of, hey, I'm 60, at 80 I might be dead, right? So I want my return quicker, unless they're investing, for the future of their family and things like that. But that type of trajectory is too long. There's no easy answer. Mike, do you have a opinion too?
If you look at the Angel Capital Association's guidance for new angels, your typical angel really is looking for return in a 3 to 5 year window. Now, the typical return usually comes in a 5 to 7 year window.
I was going to say three's really early. I think not really real anymore.
And what's reality? Here in the Midwest, 5 to 7 is totally typical. And in that time, they're going to be looking for at least a 10x return. If they put 100K in, they expect $1 million back. Here's why. The average angel investor puts 10 angel deals together. So if I make $10,000, $50,000 investments in, let's say, over a 2-year period, do it really well, pick really good deals, work hard at it, 8 of those 10 will return nothing. So of the 2 deals I have left, I now have 100K left of my 500K. And over a 7-year period, if I get a 10x, all right, I might have doubled my first amount in 7 years. That's not a lot better than the stock market, taking the 08 dip out. And to be honest, if you look long, even with the 08 dip, if you're looking 20-year averages. So understand what an angel's dealing with, and that's part of today, and we'll get more into it later to answer the question more thoroughly. But the angel has to take into account that 8 out of 10 are going to go to 0, and sometimes it's 9 out of 10. So it is risk capital, and they are going to take equity. In the end, I may do it on a note up front, but the notes convert to equity. So, and we'll get into it later on.
Does that help, Matt?
Yeah, I just didn't want to overshoot what I thought was the expectation of the investor. Clearly understand that's going to vary in the audience.
And that's where I really see people play around with how they want to talk about share of the market and time frame. And sometimes people are super conservative and say, look, if I only get 2% of this, it's a massive opportunity. And 2% isn't that much when you think about a big market. Other times though, where, well, this will flush out for the entrepreneur. If you need 50 to 75% of the market to be a decent sized business, it's probably a red flag that your market's not big enough, or you're gonna have to then go in and say, I'm gonna go after this market, and then this market, and then this market for it to be big enough. So that helps flush out that thinking. Okay, I'm gonna give everyone time to work on these two slides, market size and business model, because I really think that they kind of go hand in hand. Okay, time is up. Next, we are going to move on to competition. And when we talk about competition, I think I left my notes here. There's usually two slides that talk about competition. There's competition and competitive advantage. I often recommend that you have both because they talk about, they tell your story in different ways. So when we talk about competition, this is really a landscape of who else is out there doing something similar. What's existing technology that you would be replacing, et cetera. And you want to show a landscape of who you're competing against, what makes you different and better. And so this might be a little hard to read, but these are axes. And this one up here says affordable. This one down here says expensive. This one says online transactions, and this says offline. And so Airbnb would start to take all of their competitors and put them in a matrix. The goal is you always want your company, what they say is in the upper right-hand corner. So in this case, Airbnb is the most affordable and it's online. So they would be situated up here. Similar, this Front was the company that was filled this one out. And so they're showing how they compete up and to the right. So then you would fill out everyone who is offline and expensive, anyone who's offline and affordable, anyone who is expensive but online. So you would start to drop the logos of who you're competing against in this matrix. Sometimes coming up with what those axes should be can be really challenging, but you have to think beyond oftentimes feature sets. And think about, okay, so everyone I'm competing against, could it be by industry? Could it be by type of product that I'm delivering? It's really hard to talk about generalities around this, but so I'm going to give you time to think about what those axes could be. Sometimes also just to start to brainstorm, like, who are my competitors? And sometimes you're competing against like low-level technology. Sometimes you're competing against like Microsoft Excel. Like you might be replacing a spreadsheet, and so Microsoft would be in one of your competitors. Sometimes you're competing against just like old product because you've innovated a completely new way. You would put that there. Like I'm thinking about like a physical product. If you are doing a walking treadmill for a workspace, you're competing against chairs in one sense, but you're probably also competing against 3 other companies that have created workspace treadmills. And you have to think about, why is your workspace treadmill not only better than the chair, but why is it better than these 2 other competitors? Is it because it's customizable and theirs isn't? Is it just kind of like, those are the different things you'd want to think through. So that's the competition slide. And I always say it's better to find as many of your competitors as possible than have your investors point them out to you and say, oh, I've heard about this company, this company, this company. Why are they not on here when you think about the competitive landscape? Next part of thinking about competition is thinking about competitive advantage. And this is less about your competitors and more about why you win. And so I think there's like 5 universally kind of accepted categories of like why a business wins. Those are product, cost, positioning, distribution, execution. A lot of things roll up into those categories, and as you'll see on this slide. So one way you might talk about your competitive advantage when it comes to product is ease of use. If your product creates a barrier to switching, it might be that your IP is really unique. Execution, this is where if you're really first to market, people will talk about execution and being first mover. They also might say, hey, my team is super unique. We have 50 some years of combined experience in this industry, and look at all the progress we've made to date. That might be a way that you explain execution as a key competitive advantage. So I'm going to back up here. Airbnbs, I would say a lot of the way that they explain their competitive advantage rolls up really into product. Ease of use, the profiles, host incentives, list once, design and brand. Those are all product pieces that they're saying we win because our product is going to be the best. I think it's also important to note that you don't want to say, we win at product, we win at cost, we win at positioning, we win at distribution. Oftentimes you can't be great at 5 things. The greatest companies out there pick one thing to really knock out of the park. So think through that. I find a lot of times the founding team will influence what they're best at based on natural strengths of the founding team. Okay, that's a lot to take in. Questions?
So on this slide, do you think that this is a better way to show your competitors than the checkbox style slide where?
I prefer this one over the checkbox because I think the checkbox often gets into a feature race. And what I don't like about that is, okay, so if they go raise more money and they can just build out those features, all of a sudden they win. Like, why are you really different? I think this causes you to really think, like, how am I gonna win? And how am I really different than a feature set that money can be raised against and solve for? I don't think those feature set slides are bad. A lot of times people will also include them. Especially if there's several startups kind of in the same space to say, hey, this is how we're differentiating. But I would say that they're differentiators, not like how you really win. Okay, we need to really keep rolling on this. So I'm gonna give everyone 3 minutes. If there's more questions, I can kind of come around and answer those individually. But take a crack at competition, competitive advantage, and we'll get back together here shortly. Okay, next we're gonna jump into your go-to-market marketing plan. When I say marketing plan is really a much larger document than one slide within a slide deck. But this is your opportunity to kind of talk about how do you plan on distributing your product and service? What are some of the marketing channels you're going to use? Some examples are if you're strictly selling via online, you would say my go-to-market is online, and you would talk about how you're marketing it online. It might be AdWords, Facebook, etc. If you're going to have a blend of selling direct online, but also through Kip, I was talking with Kip, he's selling through chiropractors and PT professionals. So he would explain his methodology of not only does he have an online sales channel direct to consumers, but he's also selling through those professionals would be how he would talk about his strategy. Oftentimes, there's early on, you're doing a lot of direct selling. And so realizing that the strategy might morph and you don't have to necessarily give the 5 to 6 year strategy. Sometimes I think it's dangerous to say, we're going to do this, 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 and this, and you have nothing to back up that any of that would work. For example, if channel sales can be really complicated, and if you know nothing about channel sales, I would stay away from making a big statement that you're gonna, grow this company via channel if you can't actually talk through the channel. You'd be better off to say, in the next couple of years, I'm focusing on direct sales. That will evolve over time, but this is how I'm gonna do it right now. The other thing to talk about is how, potentially how are you going to acquire those customers? The slide on the right-hand side talks about organic growth, how they're going to do direct sales, and how their marketing efforts are going to really help them acquire customers. So those are couple different ways to think about how you represent your go-to-market plan. I'm only going to give you about a minute on this slide because I think you can capture those pieces relatively quickly and come back and fill it in with more detail later. But this one isn't usually rocket science to put together. Okay, one other thing to note is if you have any validation that your plans are going to work or will work, this is important when doing kind of the voiceover. So if you say, my plan for the next 18 months is to sell through, direct to consumer online, an investor will probably say, okay, so show me what's working. What do you know? What have you learned so far? There's times where you might be at a point where you haven't even launched that. So if you can create any sort of test to kind of get some initial, hey, this is what the feedback is, that's helpful. But also realize there's different points in times where you might not have a lot of validation, but some sort of validation of why you think that's going to work is going to be probably a question that comes up in the conversation with an investor. Another slide that we're going to work on is the team slide. So this is the opportunity to highlight any special expertise or talents that the team has and why they're well suited to be on the founding team. It's also an opportunity if you put together a board of advisors or a directory board or any kind of consultants that are critical to where you're at right now. You can also list them here. I think it's okay to have some holes and gaps, especially early on. If you haven't yet raised money, there's an assumption that you're raising money to help you build out a team. A lot of fundraising goes to hiring and to salaries, so it's okay to show those gaps. I think an investor more wants to understand that you're aware of the gap, saying, hey, I'm doing all the selling right now as the founder, but long term, I'm going to use some of these funds to hire someone in sales. Or right now I'm handling all the manufacturing and operations, but in the next 18 months, I want to hire that key position. It's better than putting someone on there and putting their name as like VP of technology when they aren't really well suited to be your VP of technology. I've seen people overinflate titles to look like they have it all pulled together, and then the investors start to dig into the profiles and they're like, that's absolutely the wrong person to be heading your sales. He has 1 year sales experience. I'd want a VP of sales to have 10 years of experience, for example. So just be careful, don't just make it look good, because it will get dug into and it has to really make sense. And it's better to have the gap than to misportray this team that's not really the rock star team yet. I think this is also a slide that I'm going to have you guys work on out of the class. It's a pretty straightforward slide. A really important slide towards the end of your presentation is to show traction. So when you think back through the storyline, you've really gotten the investor excited about what you're building. You've gotten into the fundamentals of what's my market size, how do I compete, and then you want to show what progress you've made, and that you're an executing team. I think just an idea without any traction is really hard to fund, especially in the Midwest. So there's different things you can highlight to show traction. That might be product traction, that might be sales traction. It might be that you have had a lot of great marketing and PR success. Sometimes some really great PR early on that creates buzz could be traction. And then ultimately, if you have customers using your product, being able to talk about that customer traction is really important. There's different ways to talk about traction. I think something that you can do that's a visual, if it's like a timeline or a graphic that's showing key milestones. If you have data that shows traction, data is always awesome. I realize sometimes very early on, you might not have data yet to really show a history. But something visual here. I would say if you can visualize it more than like tons of words, that would be helpful. I'm going to give you three minutes to think about how you would want to represent your traction.
If a building or storefront is part of your dream, how much of that information should you research ahead of time to include in all this?
I think it depends on, is it within the next 18 months, and are those funds going towards that component of the vision? Or are you raising funds to scale? Like, what's the intention of raising those funds?
To have a storefront.
Okay, then that has to be part of your pitch of, I've had this traction and now I want to expand to physical locations. And you'd want to show like why that's validated.
Would it be okay to show that you have other ideas or other products coming, or
that would be more of a future-oriented slide. So traction, this traction slide should be really focused on what you've executed to date. There's going to be another slide at the end, which is like future milestones. Next slide is the slide where you're going to be talking about fundraising. So on this slide, really you would put how much you're raising. So is it 500,000? Is it $1 million? Is it 100,000? 2 million? Oftentimes people will point out what kind of round is it. So is this your first, like an angel seed round? Is it a Series A? And I like people to kind of say, I'm raising $1 million to get to X in 18 months, like having a time frame of how long do you envision these funds before you either aren't going to raise because you're profitable or you're going to raise again. I wouldn't get too caught up into the naming of the round. The one thing I would caution people on is don't jump to a Series A too quickly, because then all your subsequent Series B, C, D might be out of sync. And we're going to be going through this later on, like what does a Series A look like versus an angel round? What does a B look like? So the naming is somewhat important, but we'll get to that later this afternoon. I think this is also a slide that I'm going to have you guys kind of work on offline, not during this time. Another key slide is what are you going to execute on? So you're going to take in $1 million, but what are the milestones in the future that you're going to achieve, and how are you going to use funds? For some organizations, startups, that they're raising a lot of money to have some key products developed. So they might focus on a very clear product roadmap for the next 18 months, saying I'm going to do this and then launch this and then launch this. For other startups, it might be really ramping up their team where they have 5 or 6 key hires that they need to make in the next 18 months. So most of the use of the funds are going to go to that. Maybe they would create a visual of, hey, this is my hiring roadmap, and these are the things I look to achieve during that time. Does this overall make sense of how you want to kind of portray, why are they investing in you? What are you going to use that money for? I would say this slide is really hard to develop until you've gotten into the financial model. So again, we're gonna skip this one and not have you dig into it. Your financial model will oftentimes flesh out what are some of those key milestones based on how much you're raising and what you can accomplish. Then we get into some optional slides that I often find are pretty common. If you have any great press or user testimonials, you can talk about how great your company is, but getting a customer to talk about how great your company is worth 10x you talking about it. Having some validation in the press is also really helpful. I would say don't try to force this slide. If you can't get great quotes and if you don't have great press, just don't force it. But if you have some compelling testimonials and compelling press, this is a great slide to show excitement. And then wrapping up, thinking about this is less about a slide, but like the conversation now that you've had with this investor over 20 minutes to an hour. You want to plan that there's enough time for Q&A. Some investors take an approach where the entire time they're interrupting you and it really becomes a conversation and you're having to actively try to manage back to the points that you're making. Other times investors will sit back. It can be kind of unnerving. They won't ask you any questions. They'll just listen to you. And then at the end, they'll want to dive in. And so kind of being prepared to manage both of those styles as far as who's in the room. I would say meet the style of the investor, not your own personal preference to get through all your deck. I've witnessed one time someone was pitching me and I kept wanting to have an answer and he said, well, I'll get to that to the end. I'll get that to the end. And eventually I just shut down and stopped listening because it was something that in the context of what he was talking about, I cared about. We got to the end and he really didn't cover it. And so it made me wonder he really didn't know the answer. So those are just kind of different situational events that can happen. You don't want to just say, oh, I'll cover that later. If an investor's asking a question, answer it. But you also have to be good at guiding them back to the conversation you want to have. Any questions around pitch deck, telling your company's story?
I know this is maybe a very long answer, but this is all for a live presentation. So are you going to cover anything about an email pitch deck?
No, so I would say this is also the pitch deck that you would email out if you're asked for a pitch deck in advance.
Okay.
There's different philosophies on if you send your pitch deck in advance or not. Some people say absolutely, give them the information, let them think about it, let them dig into it. Other times there's a philosophy of, well, you might not get the meeting because they make their own assumptions on the pitch deck. I would trial and error that, what works for you. It also depends on the audience. I think most investors want something in advance. So I always encourage people, develop this in a way that it could be sent as a PDF. Don't make it overly flashy with the animation and all these pieces, because you should be able to send it afterwards as a PDF and they should be able to get the full story.
So you wouldn't say to have two different sets of decks?
Because a lot of times what will happen is you'll present and then they might say, hey, I want to run this by my partner. I want to run this by someone else. And so you want to be able to just wrap that up and send it to them within an hour. Terry?
How much detail is too much detail? I was running into that. Some people want a lot, some people want a little.
I err on the side of less is more. Because I think it can get lost in the detail. It's fine to have other documents that you send, but I think your pitch deck, you should really focus on how you can succinctly boil it up. There's always use for appendix slides and data that backs things up, but it should be relatively succinct and not a lot of words on the page. That's where the voiceover, I think, is really important. That's where the conversation comes into play, rather than, it's also awkward to have a conversation off of too much writing on a page. Like, where do you start? You should think about it truly of like, I'm presenting from this. Okay, any other questions? We're gonna have plenty of time to kind of continue to wrap, get into questions that will come up. Mike.
What's the goal at the end of that?
The goal is to have a next conversation, have an action step, are you interested in learning more? Would you be interested in investing? You don't want to just walk away with like no ask. Okay. You don't want to walk away with like, oh, it's great meeting you.
Yeah,
like, what is the ask? Like,
she's got a separate one for me. Remember, the whole reason to do this is to get into a conversation. I mean, I'm an angel investor. I'm not going to write you a check after a 20-minute presentation. Okay, in fact, the next thing we're going to talk about is due diligence. So to the point of how big is the slide deck, to the point of how much detail, remember what I want is conversation with you. It'll probably take hours. But I'm not going to have that multi-hour conversation with you if I haven't decided if your company is in my fit. I only invest in things I kind of understand. So if somebody comes to me with pharmacology, I'm like, I'm not your person. I'm not a pharmacology investor. Just don't do it. So the process of raising capital is not a one-meeting process. And we're going to talk about the one-pager now.